Chapter 6 Merchandising Company Accounting for Purchases Continued. At this point, you have already set up your new merchandising company, entering the beginning balances from the balance sheet. You have set up and entered the vendors' beginning balances and new vendors with no balances, and finally have entered the inventory items and have assigned sales prices for each item. Your understanding of the chapter discussion will facilitate the recording of the transactions. Remember, this practice set will be using the perpetual method of valuing inventory items in the next four chapters. As noted, businesses develop relationships with their vendors by establishing a good line of credit to allow the need for not having immediate cash on hand. Therefore, businesses purchase merchandise inventory items on account. This method will allow the delivery of these inventory items and sell them to customers with payments to be made in a future date. So, in this chapter, you will record the transactions in a special journal called Purchases Journal, where inventory items are placed on account. Starting problem 6-6, you will record all purchases on account. On the Task tab, you want to click Purchases Receive, meaning purchases and received inventory. Understand that in the real business world, the big corporations establish another level of internal control, that is, creating a PO or purchase order to the vendors. And when the delivery arrives with the delivery receipt, a received inventory entry is recorded. This additional level of control will track the exact inventory count of the items delivered. Because of the volume ordered in the PO, sometimes the vendors could not deliver all the quantity in one shipment. Thus, recording just the quantity received is important for both the warehouse count and the accounting side of the liability to the vendors. To save time in recording for this practice set, you will assume that all purchases have been received in one shipment, which now establishes the fact that the full amount of the invoice is a liability owed to the vendor. I will illustrate the first transaction, so click the Purchase Received Inventory. On December 1st, it says you purchased 1,000 units of pain medication from Las Vegas Medical Supplies on terms 110 and 30. Invoice number 141, unit price $2, and the amount of the invoice is 2,000. So, to record this transaction, we start with the vendor ID and using the magnifying glass, look for Las Vegas Medical Supplies. On the invoice date, you want to select December 31st, December 1st of last year. On the invoice number, enter 20041. Under the quantity column, enter 1,000 units. And then under the item column, you want to select the pain medication. And the description will fill in. Observe the GL account to 12,000, which is the inventory drugs account. Under the unit price, you want to enter in $2. Observe that the amount, once you enter that in, will carry $2,000 automatically under the amount column. Since the terms have been set already when we set up the vendor, they will appear under the terms column 1, 10, and 30. You want to verify that they are correct before you click Save to complete the posting process. And once you click that, a new screen will appear. This is your chance to verify the terms in order to balance in the succeeding chapters. Once you have completed all the entries, verify your purchases journal if it matches the check figure in this chapter before you move on to the next chapter. Before you proceed to problem 6-8, you want to verify if your purchases journal is in balance. So, completing all your transactions, you are to go to reports and forms and click accounts payable. Now you want to double click your purchases journal. And on options, you want to select December 1st to December 31 of last year and click OK to that. If you scroll down the bottom, it's good to identify and look at all your transactions, but a quick check will be to verify if your bottom line total is $52,710. So once you're in balance, you can close off of this screen and move on to problem 6-8. To handle the returns of the merchandise previously purchased, a credit entry is recorded. You will follow the same steps as in problem 6-6 on task, and you are clicking the purchases received inventory item, except that the quantity returned must be entered as a negative number and the invoice number must be entered as a negative number corresponding to the purchase invoice. Sage 50 will automatically show the amounts as negative. The result for showing them as negative amount numbers is for ease in the application of the payments in the succeeding chapters. So to illustrate the first entry, let's go to December 2nd, Las Vegas Medical Supplies returned 150 units of pain medication under invoice number 20041. On the Task tab, click Purchases and Receive Inventory. On the Vendor ID, you want to look for Las Vegas Medical Supplies. And on the date, you want to make sure that it is dated correctly, December 2nd of last year. Now, on the invoice number, enter negative 20041. Under the quantity, enter negative 150. And under item, you're looking for the pain medication. Note that it will appear the quantity as amount is appearing as a minus 300. So once you have verified all the information you need to enter in, it will be very easy for you to make payments and apply this credit to the next chapter. So be sure to save to complete the posting process, and you can continue to record all the returns until December 30 and verify your schedule of accounts payable with the check figures to balance. Once you are in balance, do not forget to run a PTB backup on an external drive and label it Chapter 6 for your next chapter.